Good afternoon. This is Tony Cherniawski, manager of the Practical Investor LLC. Today is February the 16th, 2009, and the topic today is Bubble, Bubble, Toil, and Trouble. This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. A purchase or sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment that you may consider. You cannot invest directly in an index. Hello again, and I would like to just point out that Jim Rogers was interviewed, I believe, on CNBC last Tuesday, and he made a comment that investors sooner or later may have to short government bonds because despite their current attraction, the amount of debt being issued by the federal government is staggering, and the inflation risks are very high and mounting down the road. The policy of low interest rates that are being promoted by central banks is likely to blow up a new bubble in government bonds sometime in the future, Rogers said. He was short government bonds last fall and exited with a small loss as government bonds continued to rally. That's kind of interesting because most people don't think that Jimmy Rogers can do any wrong. The fact is, losses are a part of any investment procedure. What you have to do is keep the losses small and ride the winners. Let's take a look at the charts now and see what happened in government bonds and what we can expect next. First of all, we see a rally from mid-October to mid-December from 112.55 to 142.66 on the U.S. Treasury 30-year bond. That's about a 26.5% rally, followed by a decline from mid-December until about a week or so ago of about 13%, down to 125.15. What we have here is a stair-step down in smaller and smaller proportions called a falling wedge. You can see that the trend line intersects at the bottom, giving the wedge appearance, and this pattern is bullish. One of the things that I want to point out very quickly, however, is that there is a 10% failure rate, and the failure could be construed to be a drop below 123.50 at this point in the long bond. So, given that information, let's talk about what are the potential targets. There are three targets mentioned in Bukowski's book. The first is a 20% rally, a 30% rally, and finally a potential, probably a much lesser potential, but there nonetheless, of a 43% rally. That gives us three potential targets, 150, 162.50, and 178.50. So using that as our example, you can construct some type of pattern policy that you might follow as an investor to take profits off the table as this pattern progresses. And this is something that you will definitely need to do because this is not a buy and hold pattern at all. This is a trading pattern. So I want to just bring all this up to you because as we've noticed over the last 8 years, we had a bubble in stocks, followed by a bubble in real estate, followed by a bubble in commodities. All of these bubbles popped, and in some cases the decline was dramatic, such as in oil and gas this last year. So we want to just be very careful in pointing out that the risks as this bond market goes higher will also substantially be higher as this bubble progresses. At the same time, we have a pattern that gives us a high reliability and the ability to profit from this on both sides. Jimmy Rogers is saying short bonds sometime down the road. I'm saying let's take a look at this rally because this rally is quantifiable as well. Given all that, what I'd like to do is offer a newsletter special to those that are interested in following bonds as well as other indexes. If you are interested in following up on that, I'll be happy to hear from you at tonyc@thepracticalinvestor.com. My website is www.thepracticalinvestor.com, where you'll see a weekly newsletter and other information on how to become a client. I wish you all much success on your ventures into the market, and I hope this one is one of your more successful plays. And by all means, do the right thing. Thanks for hearing me, and we'll talk again soon.